last broadcast didn't record. I'm going to do a rehash of what I talked about at the beginning of the webinar we gave on Friday. Naturally, not a whole lot has changed in the markets since Friday. Basically, markets, historically speaking, have not corrected more than a few percent since June 2016 up until recently. And the recent correction has been the fastest drop in 80 years. And I think that is noteworthy because it indicates that institutional capital is very quick to exit if necessary. It's possibly due to, and it's probably due to, the onerous levels of debt that have to be unwound. You know, markets are always forward-looking by 6 to 9 months, typically, and with the Fed having to hike rates at least 3 times this year, if not 4 times, I think that unnerves markets. And so, you know, we had this V-shaped bounce in the major indices because we got a lot of QE sloshing around. So when markets correct 3 or 4%, they found a shallow floor. This time it was just over 10% that the floor was found. And it's certainly an indication that the volatility was, I think, at record. Well, the gains in the volatility were at such a high level on that one day when the markets were plummeting that it upset and decimated really instruments like XIV, SDXY, not VXX, but the inverse ETFs that are selling volatility. So they all lost at least 85% of their value, 90% of their value. And I think all of that, you know, it's an indication that, you know, right now where the markets stand, you know, as coming straight up off the lows, we would probably get some sort of pullback. We could even get a retest of the prior lows. And stocks are, you know, vulnerable, but certainly bonds, if you look at the TLT, the 20-year, that gauges the 20-year treasury price, and they weren't able to bounce, even though the stock market was able to bounce, because the bond bear market is clearly underway. You know, now that we've got indications of rising inflation, well, at least the latest CPI and PPI reports were ahead of expectations. So that squeezes the Fed basically, and they have to maintain an aggressive stance on rate hikes based on those reports and possibly subsequent reports. And they have to do this despite economic conditions remaining still somewhat fragile. And we could see a form of stagflation where you get this persistent inflation without growth in a rising rate environment. So in other words, having to hike rates in the face of a fragile economic recovery could hamper the recovery. That's no surprise there. It could even stop it in its tracks. So we're not in a comfortable situation right now whatsoever. But again, there's, you know, we've been saying, you know, talking about how far down the road can the can be kicked, and you know, the Fed and other central banks have been painting themselves into a corner, tighter and tighter every year, and that just can't go away. I mean, that doesn't just, you can't just blink and then all of a sudden all the debt's gone and we're back off to the races again. The world has not been in this much debt in ages. You know, and so this is going to be an interesting time to see how the Fed manages and central banks manage to support the markets, because, you know, we're 9 years into this bull market, and they certainly don't want to undo what they've, you know, done in terms of this QE bubble. I think that they might have no choice but to, I mean, if history's any example, the debt never gets repaid. So I don't think they're going to have a choice but to relax rates again, certainly if the economy starts to weaken and if inflation starts to strengthen. And also that's based on the doctored reports. You know, CPI is doctored, so is unemployment. These are not real statistics. Shadow statistics have a more accurate representation of what the real inflation rate and unemployment rate are. So we're in unprecedented times, and you know, it's something's got to give. And I think that if the central banks just keep printing, Bank of Japan, Bank of England, and the ECB, they're all still printing at near record levels. Yeah, you could say that the ECB reduced its bond buying by 30 billion euros a month. It went from 60 down to 30 billion a month. But that's still well, first of all, they're still printing. I mean, they have to unwind the trillions and trillions of debt that have been generated over the years. And they're not even close to that yet. I don't know if the stock market really stands a chance. I mean, certainly the bond market doesn't stand much of a chance. And I think the central banks are going to just have to keep printing. I don't think they're going to have much of a choice. You know, they can do these token reductions in the amount of money that they're printing out every month. But how do they tackle, what's the total global debt right now? I mean, what's the figure on that? How do they tackle that basically insurmountable amount of debt without completely crashing not just the bond market, but the stock market? I don't think they're going to do that. They're going to just probably try to kick the can down the road some more. I mean, even Yellen, before she left, she said that she was still open to negative interest rates, even though that's been shown to be a disaster over in Japan and in Germany. Negative rates. But I don't know if they're going to have a choice. So it's going to be interesting to see how the markets play out over the next 12 to 24 months. Now, I mentioned that another bubble that's forming, like we don't need another one here, but corporate buybacks have been shooting to all-time highs. And as you know, that exaggerates corporate earnings. It acts as another catalyst to this whole global sovereign debt bubble. And essentially, the near historically low interest rates have made massive stockpiles of money available to companies at a very low cost. So they've been using some of it for stock buybacks. So, you know, again, we see, you know, these companies coming out at S&P. We got through earnings season, and how many, you know, a good number of companies beat their estimates, earnings estimates, and their earnings continue to look healthy and robust, but it's artificially inflated due to the buybacks. So all those things have to be factored into where things sit right now. And I think that where the markets are right now, you know, straight up off the bottom, I think we put out a couple of reports on some stocks that are short candidates, and I think there potentially are more, and we can go through some of that in today's webinar, because markets look pretty vulnerable where they're sitting right now. And that's the other thing is, I've noticed that when you have sharp pullbacks in major averages, this is a very rough rule, but there is a tendency for them to overshoot by 50% on the bounce, like the NASDAQ and the S&P have done, and then roll over. Not necessarily to resume the correction and hit new lows, but there's going to be some sort of pullback that can be expected. And the S&P on Friday basically closed flat on higher volume, so that's a distribution day right there, and that occurred on day 6 off the rally lows.
Right. You also, it's a little bit of a shooting star formation. This reminds me of the initial break off the peak in 2015, I think in August, where you had a big break immediately off the highs and a sharp rally, a V-shaped rally, and then it sort of dojied out around the 50-day. I'm trying to remember, just above the 50-day line. I think the NASDAQ looks more like that, but you can see this is more of a dragonfly type doji here, shooting star type thing, or I'm sorry, not a dragon, a gravestone doji, and it looks problematic. You notice I had a couple of gravestone dojis right around the peak that are like that before we broke to the downside. But yeah, the question I think, Dr. K, here is, is this rally the beginning of a move back to highs? You know, we're just going to shoot back up to the highs, or are we in a position here where we're going to roll back and test the lows? And it seems to me that either is a possibility, especially when you consider that so many stocks have had these big rallies over the last few days, and you have to ask yourself whether that is sustainable. And I tend to think it's not. If everything just goes straight up, okay, now you got me thinking this is just a crazy QE market, and it's very difficult to find buy points, because if you start sitting around waiting for breakouts, you're probably going to be late. And the only thing to do is to buy undercut and rally moves that occur at the same time that you see the index is doing that, undercutting prior lows on the left side of the chart and then jacking back to the upside, and you'll see stocks doing the same thing, and you just jump on them, you know, without thinking or even considering whether there's a base, you know, what sort of pattern there is. It seems like we've gone into an extreme Wyckoff market where you're getting Wyckoff springs tend to be the one and only buy signal that you see in the market. And I suppose the only thing that would relate to this in the O'Neill vernacular would be an undercut and rally, not an undercut and rally, but I'm sorry, shakeout plus X, where they decide what the X needs to be based on the price of the stock. So like, for example, I hope I'm not cutting you off here too much.
No, it's fine. I mean, I was going to actually talk about Apple because
there's okay, we're on the same wavelength. That's good. Not bad for a 3-day weekend. But yeah, look at Apple. You know, what did Apple do? I mean, Apple looked like crapple, right? I mean, it just blows apart. That just blows apart. And Apple's widely owned, and you would think someone might support it, but it might be over-owned at this point. And this thing just comes apart like nobody's business. But it is, I guess, a yield. It's also considered a yield stock to some extent, and maybe rising interest rates had some effect. The slowing iPhone sales, the iPhone X is not selling so well. But you can see here, where is your buy signal? Well, if you want to get real tricky, you could say you had one low, and then you undercut here and rally back above it. So you have a near-term UNR or undercut and rally set up, and boom, you're off to the races. But if you did buy that, where would you take your profit? Would you assume that this is going to go all the way back up to the highs and back above the 50-day line? And I would say, for my money, no. You know, I play these moves, and I might play them for 2 or 3 days max. And if I'm lucky, I'll get a 10% move, maybe a little bit more, because they're not orthodox setups. They're quite haphazard. So it's kind of like stepping into you know, I don't know, a washing machine and just hoping you come out the other side, come out of the spin cycle making some money. And that's really what you're doing. You know, and everybody, you'll hear people babble about BTFD, you know, buy the freaking dip. And okay, which dip? The initial break off the peak, and you buy that one. So for example, let's go back to the NASDAQ. Dr. K, I know you got some stuff to deal with. Whenever you want to run, just let me know, and I'm more than happy to take over. We got about 15 minutes before the afternoon futures open up at 3 p.m. Pacific time, which I guess is 6 p.m. Eastern time, and everywhere else in between for those of you in flyover country, and then maybe in the morning for those of you in Europe and other places, or even Thailand. I know we have some members in Thailand. But anyways, where was I? So now that you're up here, you don't know, okay, where are you going from here? You're just going to roll back to the downside? I would say there's a reasonable probability, but you're sort of just kind of hanging up in here. And maybe if you had a retest of the 50-day line and you started to set up and tighten up, then maybe you could say we're going to get out of here. Because if you look at this, I think we made a point of this over the weekend in the focus list review. If you look at this rally since, I mean, just going back through the election. So the election is back here. This was the election back here. And you've had this pretty nicely trending uptrend. And all of a sudden it broke out of the uptrend channel here, and you started to accelerate. And I was giving it you know, it could have done this too, but instead you finally ran into a point of no return, or a point of where you lose momentum essentially, and everything is kind of exhausted. Everybody gets extremely bullish and exuberant. But I can tell you one thing: right at this peak, I had two people who are engineers, okay, and they're chemical engineers and chemists and pretty high level engineers who wanted to become professional traders. So they contacted me and wanted my advice on how to pursue a career in trading, which is something I'm not really very good at doing because I didn't really pursue a career in trading. I did not find trading. Trading found me, if that makes any sense. I think the same thing for Dr. K. We didn't really try to do it. We just kind of ended up there. So, so don't ask me how you pursue a career in trading because I have no freaking idea. Anyways, so, what do you buy? What do you buy? Well, in the Voodoo report, I tried to make some sense of this market, and I think it was Tuesday night I put out a Voodoo report on Roku, and by the way, I'm going to ask you a question. Do you like TC2000? I actually like this chart. I set this up thanks to Sasha, who's a member. And in fact, I think he's one of the people who lives in Thailand that we have as members. And we set this up with the VIX fix, which is a very interesting oversold type of indicator. You have a couple of trigger up on top, and then you have these histograms down at the bottom telling you that things are getting a little bit oversold and scary. And in this market, when things look very oversold and scary and downright ugly, that's when the ugly duckling shows up. And so this sort of stuff is very useful, I think, in this market. Now, it's not, pinpoint accuracy because supposedly this is supposed to be when the green line here goes above the red line, it's a trigger, a buy signal. But you notice that when that happened, you really didn't get you got a low in the stock, but it retested it once. And then finally, I'll watch these things for a period of time, and then somehow I'll get a sense that, okay, this is it. It's time for this thing to turn. And just before, I say a week or so before earnings, I think they're reporting on the 21st, which would be, Wednesday? Is that right? What I pick off is this is the lowest volume in the pattern right here on this day. That would have been 1, 2, 3, 4 days ago. Well, Tuesday night. And so I put that in the report. We got a nice move to the upside. It's about 10, 12, 13%. And on Friday, it did have a pocket pivot. But anyways, so I like this TC2000 chart because it shows some interesting stuff. There also was another trigger in here. I don't know if that really counts. Someday when Sasha comes into LA, we'll probably have lunch. He can tell me more about how this chart works. But we did send out the instructions on how to set this up on TC2000 if you use that program. So TSV, very helpful indicator. I have to check that one out, Alan. I haven't checked that one out. I got to tell you, I get TC2000 just as a backup mostly. My other main programs are, well, I do use MarketSmith, but that just replaced my Wanda because it's as good as Wanda in about 1/25th the cost. I don't see why I need to pay $25,000 to something I can pay $1,000 a year for. And I think anybody who does is a moron. But you like my background there? That's a picture of my pan in gold country. There's quite a bit of gold in the pan there. Anyways, but you have to pay them $50,000 and they guarantee you'll find gold. Anyways, I think they just throw it in. But in any case, we've got HGS Investor, which nice big, this is my fat chart setup. So you get a nice view of the charts there, pretty nice. And we have e-signal over here, which we use most of the time. So you got a choice of 3. I don't throw up MarketSmith because balance of power, that's the old one that they used to have. I used TC2000. That was actually the first program I ever used back when I was a broker in the 90s when you had to download. You pick like how many symbols you want, and they charge you 2 cents a symbol or something to download every day after the close. That was my much anticipated afternoon activity. Little green charts with balance of power. I think TSV, I think they had that one as well. And I used to use all that stuff. It worked. It worked better back then. These days, it's kind of crazy. So anyways, I don't know which one you guys prefer. I know there's a number of you on, but you all seem pretty silent right now. We only have 2 comments coming through the questions thing. You can text in questions. I don't know if you guys noticed that. So we have a bigger group than normal because of the weekend. We normally don't do this either. We do it live, although I'm not sure what the value of that is unless I find you a good trade during the day. But in any case, getting back to my TC2000, the other one was AbbVie, because you could see this one setting up. The volume is drying up, and that would have been Tuesday night here, and it's gone higher. So I mean, maybe about 5%. But those were actually coherent setups. And there aren't a lot of coherent setups in this market because everything is V-shaped. And I can show you this. Here's the Adobe. You can see this is my buy list right now, and it's a little bit, it's got a little of this, a little of that, but a lot of uncertain patterns because everything's come straight up off the bottom. And in this case, you're right at the highs on Adobe. But it was a leader, and it was acting well until everything broke down, and it basically dropped into this structure here. And you could say it undercut these lows, but I don't know. It's more like it came into this structure, the low part of this structure, and which is where most of the price congestion is. So it does give you a little better support here. But I mean, how do you know, unless you're tracking the undercut and rally in the indexes, and even then, when you see the indexes undercut and rally, and the stocks do the same thing, it's very unnerving to try and buy something like that if you're very much oriented towards buying breakouts or even tight action. You know, where I'm oriented more towards buying tight action, and I've had to acclimate myself to buying these crazy spinouts where you undercut and rally because you get huge moves off of the lows. In fact, you'll probably find if you bought something like this thing off the lows here, the move from here to here is probably the best move you're going to get out of this thing in a long time, because even if it sets up again and breaks out, it probably won't even have a move like that. So the best moves seem to occur this way. This is another thing that makes...
That's the nice thing about the volatility that the markets have been undergoing, is you get these sharp moves in both directions. So things like the undercut and rally pattern can be gold mine because of patterns like this that repeat over and over again, and you can almost take your pick on buying the most the stock with the highest beta is liable to give you the most time value. You know, just buying it as
it's an instant trades, and short them and then go long, and you're making, you know, you can make a fair amount of money depending on the size of your position. But the mitigating factor is that there's a lot of uncertainty at the time, and again, we know what a really bad bear market looks like. We've seen them, and how do you know that the stock that you're buying down, you know, 10% off its peak isn't going to go down 30 and nothing flat? Because the markets have this sort of unstable feel to them, where the machines, I think the selling is due to machines. And there are too many of them, and there are a lot of ETFs, and they all have to rebalance depending on which way the market wiggles. Well, it doesn't really wiggle. It's more like it swings in wide ranges. And so when things start to move in one direction, it's almost as if everything just starts to pound and build momentum in one direction, and it sort of overshoots, like you were saying earlier, Dr. K. And then you'll rally, and now everything has to come back in, and it overshoots again. So my guess is that we will probably retest these lows. We'll see. I mean, I'll give you at least a 30% chance that we just keep going to new highs, and this turns out to be a massive, massive shakeout. Because as I was saying earlier, you can see that if we go back to the, and I think this is the point I was trying to make before I lost my tiny train of thought. My train of thought is a Thomas the Train, so just in case you're wondering. He's a very happy train of thought. Anyways, you can see after September we broke out, and this really changed character in here. So is that bad? Is that good? Is this just a massive shakeout? To me, it looks like, I think a shakeout might have taken you through the 200-day on the NASDAQ. I don't know. And you might have seen a 2,000-point down day. I think I was talking about that a couple of weeks ago during the webinar. And now you're gone straight back up. So I got to think that maybe we're in a period of where you're going to have to experience some volatility for a while. It's going to be difficult to find anything trending. You'll find things, you know, jerking one way or the other, and you'll get some good swing trades if you're oriented that way. But it's very difficult to say that, at least at this juncture, that there's going to be these great trades to be had, and there's new leaders emerging, and they're going to have big moves. Now, I'll show you some of the things on my watch list right now. Somebody says HTSI is good mainly because I already have it, and I think candles are value added, in my opinion. Yeah, I like the candles. They give you a different view, so I'm just trying to change things up today. But, I mean, some of the things that have worked. Okay, Roku gave you a nice trade. I don't know if anybody, we didn't put a report out on this one. We probably should have that morning, but it's kind of a dicey thing. Solar Edge had a big move. It's probably the only solar that's having any kind of a coherent move right now. But that might come back in and retest, and I'd be watching it to see what it looks like. They had a 183% increase in earnings, 166%, I'm sorry, and a 70% increase in sales. And that's a pretty big acceleration because you've gone minus 29, plus 25, plus 43, plus 166 on the earnings, and then minus 8, plus 9, plus 30, plus 70 on the sales. Now, maybe that means that's as good as they're going to do. But this thing, you notice, again, you had an undercut of this low here and then turned and rallied ahead of earnings and then gapped on earnings. So it's possible had you caught this, and it was catchable. I mean, if you keep something like this on your list and you have a handful of them, 10, maybe 15, and you can monitor them in real time as the market's coming down, you can pick some off on these undercut and rally moves and catch a nice trade. So if you had, you might have had enough cushion here to hold through earnings, and then would you really? Most of the time these solars are looking like crap after earnings. I think SunPower came out with earnings and it gapped down big, and then it turned around on Friday. So, but that's not much of a, that doesn't look so hot. First solar, I'm trying to decide, is this a long or a short? What you're noticing here is you've got this VIX fix thing spiking. The bars are getting big. So, and you have a cross here on the indicator. So you might look at this on your TSV and BOP, Alan, but you're holding tight in here along the 20-day. Now, I don't know if this is going to move higher or it's going to roll over. But, this is an interesting situation because on this day you had this massive breakout on big volume. It looks great, okay. And then it just kind of floats back in because they're anticipating an announcement on June 26th was the anticipated date of solar tariffs being implemented. And as it turned out, it was on this day that they actually confirmed that there would be solar tariffs. And the stock started to rally on an intraday basis, and then from there it just blew apart. Broke down, had a little bounce, and then just rolled over. Whoops. And has rolled over. And now it's deep into this, it's dropped into this structure, went deep into it this day. That was the day that we bottomed in the market. Now you're trying to rally back up. So I'm wondering if SEDGE can hold up, SolarEdge can hold up, can this one? And do people start to, oh, well, we just had tariffs announced for steels, and those all went nuts. So, so I actually bought some X, and I sold it too soon, and I didn't buy enough of it. Of course, you never do when they have a move like they did on Friday. But I was thinking, okay, this will run up and then it'll roll over because it'll be a sell the news type of thing. Steel tariffs are great. I don't know if it adds up to huge profits for the steel companies because you're basically raising the cost of a pretty necessary input for a lot of industries. Airlines, aerospace, autos, especially autos. And so if you raise the price, do you reduce demand? Do you hurt the businesses? Their costs rise. So it's sort of a double-edged sword. So I'm wondering whether these are going to actually pan out, but there's no base here. There's just a U or V-shaped formation, whatever you want to call it. If you squint, it's a U. If you squint more, it's a V. If you squint even more, it looks like it's straight down and straight up. So, it's just a big U. It's not even an IPO U-turn. It's a big stock, old industrial U-turn type move. But you did have, I believe, an undercut and rally. If the low here was 30.91, the low here is 31.17. You did have an undercut and rally through this low here. So that could have been your buy point, and then it gets above the 50-day line. But there's no pocket pivots in here. And now you have this big move to the upside, and it's breaking out. Now, you're going to buy it? No, because it's like a 2-week base, 2.5-week base. Is it a flag? No, it's because too deep. So, the other ones in the group, we can go through these. CNX, this is an aluminum. There's a pocket pivot. I guess if you wanted to consider buyable, you could, but it's 10% away from the 10-day line. I think more than that. No, about 10%. So, is that right? Yeah. So, but is it a breakout? Are you going to buy it? CMC, commercial metals. Pardon me?
Commodity stocks, the CRB index has been rallying for a number of months, but in the grander context, if you look at the weekly on the CRB and a lot of these commodity stocks, you could still argue that they're not out of the woods because they've been in a downtrend for a number of years. And meanwhile, so we get a few, we got we got a rally that's been going for a number of months in commodities, but that also is predicated on the global economy having actually mended and turned a corner. This doesn't look like the kind of rally you would expect to see if the economy really was okay. I mean, this to me looks like the anemic bond rally, the bond market rally we had in 2017.
Yeah.
And so I wouldn't be surprised if like all these stuff stocks are vulnerable to messy patterns as they try to find their way higher. I don't know. I don't think there's a lot of juice to the upside overall. To play these things for a number of weeks, hoping out of your buck for being invested in these commodity type names. Maybe you do a swing trade, fine. But something more something that's going to last longer. I don't know. I'm not seeing it. I'm not seeing the odds in the favor of commodities at this time. I mean, and it simply comes back to the global economy. I mean, we're not out of the woods yet. If we were, then these central banks wouldn't be printing still at near record levels.
Yeah, I would agree. I think all that's baloney. And by the way, you had earlier talked about what's the amount of global debt. It's I saw a number on CNBC.com from January 6th, which was 233 trillion. So, and the U.S. is, I know you have to laugh.
That's a really big number, and it's coming from CNBC. So it's probably even bigger than that. But that's just monstrous. That's not going to get paid. That it never has. I mean, I've said time and time again, challenge me, show me a time in the last 5,000 years when debt anywhere near that level as a percentage of GDP has ever been repaid. You can't. I've never.
No, it's not going to be. So something's gonna eventually, push is gonna come to shove. I was quite entertained by the email you got from somebody questioning your Dr. K's crypto corner piece over the weekend. And it just struck me as an individual who's extremely naive about, in terms of their faith in governments and their ability to run things correctly. Because governments screw up left and right. They're just people, and usually they're not even the best people. They're a bunch of jokers, and they just screw everything up. And I got to say, I think the Trump administration is turning out to be a little bit of a bunch of goofballs because they're just increasing the debt. We're going to be running trillion-dollar deficits in 2019. And that's become the new normal, and over $1 trillion in interest paid every year that we have to pay. And I don't, when does this end? So I don't know. I'm not hopeful, but we'll see. But then, we're just whining.
It's the reason why fiat currency has a limited lifetime. I mean, granted, okay, for 40 years, 50 years, 60 years, that's a long time, and it's most of people's lifetimes, and people have short memories, so they get this false sense of comfort that the dollar is always going to be around. But historically speaking, you'll see that there's been times when the Portugal fiat and then the Dutch fiat and these different countries, that was the leading fiat currency of the world. If you go back 1,000 years and study the centuries, and people get conditioned to thinking it's forever, but it never is forever. And I think the world's at a tipping point now, and that's why I've been putting out these crypto pieces because there's enough hard evidence that exists now as to why Bitcoin is priced where it's at and why it's had such a monstrous, stellar, meteoric rise. And I think it ushers in a nice transformation from fiat, we'll say from conventional fiat to perhaps crypto fiat in the coming years.
Anyways, so you got all these steals. There are pocket pivots, V-shaped pocket pivots, breakouts. I think CMC probably had the best, nearest to the pivot point, and maybe the longest base of any that I saw. Steel Dynamics and other U-shapes. So the reason I bring these up, and what we're talking about in terms of the commodities being weak, maybe these things just have a pop here and then they become wildly shortable. So I might keep an eye on something like that. We also put out yesterday, I think, a report on Yelp. You can see here you've broken down and you reversed at the 50-day line. So if you had a little move up towards the 50-day line, it might bring it closer into shorting range. But it's more or less in shorting range. You just use it as your stop or a guide for a stop. You know, if you want to give it another 2% or so, you can do that. I mean, we always get the emails from people, you know, when you say something should hold the 50-day, do you mean to sell if it breaks on an intraday basis, or if it violates the 50-day, or if it closes below? I mean, you know, you can use any of those and figure it out. You know, how much are you willing to lose, and what do you want to use as a selling guide? Just beyond the moving average, at exactly the moving average? Does it need to close beyond the moving average? I think if you're on the buy side, if you're using 50-day moving average violations, you're probably going to be late. So I wouldn't adhere to. Anyways, so we can see Adobe Systems breaking out. Notice though the breakout doesn't occur on any volume. AMAT, we put a pocket pivot report out a couple days ago, and it's actually holding up. But that's so V-shaped, it would have to reset or rebuild along the 50-day line, in my view.
Take your profits. When you get patterns like that, you want to take your profits because you gained your time value is really nice on stocks that just jackknife up from from the lows up to where they're at right now. You don't want to get greedy on those. You got to play them fast.
Yeah, I just take a profit if I bought it, a couple of bucks. Ameritrade trying to settle down. Amazon, you know, here's the thing with Amazon that I don't like. I think we talked about this. You're one week down and 1 week back up. That's not a base, so it's hard to say you're going to buy it. If you bought it off the 50-day line, I think you have a nice trade, but I'm not sure. So everybody's telling us what the futures are doing. I actually have futures quotes, so I can see that the Nasdaq is up 0.5, S&P down minus 350. Those are the minis. The Dow's probably down 20 or 30. I don't know. I don't have those up. ANAT, we were looking at this on Friday. People wanted to buy this as an undercut and rally, but it didn't happen. So it looks like it's headed lower. That's pretty brutal. But look at how well that was acting, and then all of a sudden, kaboom, it's done. Aptio had a nice move on Thursday, and it's hanging tight. It's not really in a buy position. Coals are making a comeback. You can see a pocket pivot on Arch Coal as it comes up through the 50-day line here, but it may back in. I don't know if this is gonna necessarily work, but that's one to maybe look at or have on your watch list. Activision is pulling back in towards the 20-day line. It broke down here on through the breakout point, and then of course it didn't really undercut this low, but it got down into this structure here, and then shook out, got back above the 50-day line, and then has pushed higher. But, you know, I think the move has already occurred. I think that's the case with most of these. And you're not going to get a bunch of upside from here. So you're going to have to be looking around for things that are setting up. Boeing back up to the highs, not in a viable spot. Alibaba pulling into the 50-day line here. You can see that. But no, you know, nothing really happening here. I guess that's a lower risk buy point. Use the 50-day line and get the hell out of Dodge if it breaks. BlackBerry might be setting up. You got a nice move up to the 50-day, and then you pull back slightly, hold tight in the doji. Volume's drying up. Maybe it goes higher. I think Baidu had a pocket pivot coming up through the 59. It's trying to hang tight. But again, I got to think that these V-shaped move, it needs to do some sort of work sideways at best, okay? So there's no reason to hurry into these. But where you see some of these maybe trying to come back and setting up. Baozun is like, they come out with earnings, I think, relatively soon. Caterpillar, Here's CNX, we already looked at that. Cloudera, this is an overall pattern. You can see it may be trying to come off here, but it's hard to get a beat on what this thing is doing, so I'm not really a player in this one. And tell you the truth, in terms of longer term trends, I'm not a player in anything right now. CRM, here's a Louis, you know, boom, 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 back down, and then you pop off. I guess it was buyable in here along the 50-day line and took off. But again, you're faced with a situation where the move off the lows has already occurred. So, you know, you're either there or you're not. And it's not, again, the setups are not really what you would be looking to play in most cases. eBay's kind of hanging out. Echo Petrol's another little oil. Facebook can't get above the 50-day line. I don't know if this is a short or a long, but if it got above the 50-day line, that would be positive. But for now, you've undercut this low, you've undercut this low down in here, and you're trying to move above it, so maybe it does turn. But I think one of the things working against Facebook is that it's over-owned. So I actually like Twitter, which I thought was buyable closer along the lows here, and probably talked about it last Friday. And now it's back up here. I'm looking for pullbacks in the 10-day line. I think if we do get a trending market, then I think Twitter and also Snap will emerge as the new social networking leaders as Facebook kind of flounders around for a little bit, and maybe it eventually catches up. But I got to think these are the stronger leaders, and they may base for a little while in here, but I would definitely keep them on your watch list. FireEye looks kind of interesting. It has had a big move off the lows here, and it's trying to hang out up above, close to these prior highs. But I think this needs more time, but that's on my watch list. Fortinet has acted pretty well. We put a pocket pivot report out on it here, and then it immediately came in with the market, but it held the 50-day line and then posted another pocket pivot here and turned and went higher. So that's acted okay, but it's extended now, of course. So that's one that's been acting well. And I wonder if the whole cybersecurity space might come to life. That's a possibility, Here's Bitcoin Investment Trust. You get a natural rally back up to the 50-day. I still think it needs to base more. We'll see. GoDaddy back up to the highs, not really playable. Grubhub, this was a gap up. Looked like a buyable gap up, but it failed, and it broke down pretty good. So you might have been stopped out if you tried to play this one, but it turns around and goes to new highs. At this point, it's extended. But you're going to see that, again, in pretty much everything. iBroker looked good at it for a while. Whoops, what's going on here? As it was trending higher, and now it's getting a little weird. Intel doesn't look very good. Almost looks like a short. JP Morgan, the banks all went right back up towards their highs, but nothing really doing there. This KLXI, I started tracking this when it had a buyable gap up here. NASDAQ futures coming off a little bit more, but nothing really too exciting. I think you're coming in. I mean, we'll see what happens, but I think you're going to have to retest the 50-day line. Maybe you eventually retest the lows. So I'm not in a big hurry to start buying stuff. We did put out some, good trades out of Roku, AbbVie, Light. We put a pocket pivot report out on this day when it had a bottom fishing gap, not a bottom fishing Bible gap, but a bottom fishing pocket pivot. And it's continued higher. It had another pocket pivot, I think. Whoops, no, right here. Coming up through the 200-day line, and it's been moving higher. And I think this thematically might have something going for it. If you look at the weekly chart, I'm just going to throw up a weekly chart. I'm not going to change. You can see that on the weekly chart, don't pay any attention to the moving averages. They're meaningless because they're meant for daily. You can see you have this big volume spike and this big volume spike that occurs here where you have this long tail, like a kind of a hammer formation, doji hammer, whatever you want to call it. You're undercutting all these lows, and this one, same thing, and now you get back up here. Now I keep an eye on this as it may set up along the 200-day line if the market starts to chop around. I think this may have some longer term potential. It's pretty clear that it's being accumulated, but it wasn't really clean. I thought this was the bottom initially down here, and that didn't hold, and it just found resistance at the 50-day line. That's not here, but we go to the daily chart. First I got to get rid of this pen. This is where it tried to hold the first time and undercut this low, and then it rallied, and then it rolled. It's just chopping around, and then finally it just came apart. Nothing really happening there until you get to this undercut and rally, and then you turn. So that actually worked out. Now you're just jetting to the upside, but we put that out as a report there, and it's worked. We put a few reports out, and the stocks actually are higher. Not necessarily in a straight line in most cases like Light was, but they are working. And if you take the Voodoo report, I don't write much. I don't write those very often, but when I do, it's when I think I found something that looks like it'll work and it's unorthodox. And right now it's a very funky environment, so you don't find a lot of things that you have enough confidence in to tell other people, okay, here's a setup you need to be looking at. So I think when I do put out a voodoo report, you need to pay attention, because I've been passing on a lot of stuff to get to the names that I talk about in that report. STLD is a steel talk. Yes, we know that. Why are you telling us that? MDXG. These, I mean, some of these look like they're not really happening. Momo. Here's ArcelorMittal. That's another pocket pivot at the 20-day line. You had a pocket pivot at the 50-day line. Steel stock. So MTOR, Meritor. That's not really happening. That's been on my watch list. Netflix. Netflix is another one that was down and then back up, and I'm not sure what's going on here. It probably needs to go sideways at best. Nectar Therapeutics. This is a pocket pivot here, and now it's sort of coming back into the 10-day line, which is here, and maybe it's viable. I don't know. Still a bit on the extended side in terms of the overall trend. ServiceNow was acting really well all the way up, and now it's sort of getting choppy near the highs. I'm not really into it. Nutanix, I'm not sure if this is a short or what. I think they come out with earnings in a week or two, and it broke down here, and that's got, broke it to the downside. Now back up in the 50-day line. I'm wondering if this is a short in here. I actually shorted it on Friday and scalped a few cents out of it, but nothing big. And maybe I'll return to it this week, but that's one I've got on my short sale watch list, but that was on my buy watch list. Here's Nucor's, another steel stock that had a move. Nvidia, and Nvidia is straight down and straight up also. It shows a little more support in here because of the earnings move, but I think for the most part, you got to be careful. It's very V-shaped. It could come back in, so I wouldn't be buying it up here, obviously. Here's Palo Alto Networks. You can see it's trying to, it is breaking out and it's trying to move higher. It's a little bit stalling a little bit on that, but earnings come out at the end of the month. Paycom straight up off the lows into new highs. Pod, Insulet Corp, same thing, straight up off the lows and now back up to the highs. I wouldn't be buying it up here. PayPal Holdings bounce off the lows back above the 50-day, sort of in no man's land. Qualcomm, can't really figure this one out. I know Broadcom wants to buy them, and they keep saying they're going to, I think they raised the price the other day, but I don't think Qualcomm wants to be bought. Otherwise, I would think this might go higher, but sort of neither here nor there. Here's this Reju, nice big shakeout. Rise Education, it's a Chinese stock. Not really something I'm looking to buy up here. Red Hat broke out to new highs. Ring Central had a gap up move here and went to new highs. Here's Roku, pocket pivot. We already looked at SolarEdge. Skechers, looks sketchy. Snap I like, and that was buyable along here as it pulled in. The volume dried up. You just have to go with the turn. Now you're back at the highs. I think you're going to do a little bit of this, mainly because if you look at this, well, let's see that. Here we go. You can see you're coming up into this area of congestion here. So I don't know how much of that figures in, but you might get some profit taking that makes it just chop around. So I'd just be watching for pullbacks. Watch the 10-day line as it comes up. That might be a support level that's worth watching as a pullback point to enter the stock. And if you go back and, well, we'll get to it right now. It's actually not too far. Here's Splunk. This broke out. It's coming in. This isn't long enough of a base to be buying a breakout. I think you need to come into it a little further in the pattern. Square is a little screwy. It was breaking down, but it undercut here and turned and rallied, and then you got a pocket pivot on this day, and we put a report out on that. It's hanging tight along the highs, but earnings come out next week, so I'm not willing to take a shot at this ahead of earnings. Steel Dynamics, which, believe it or not, is a steel stock. That's why they call it Steel Dynamics. They don't call it Aluminum Dynamics or Copper Dynamics or Molybdenum Dynamics. In any case, same thing with the, like the rest of the steels. Here's Tile Education Group, straight up off the bottom, up 6 days in a row, breaking out or trying to break out. You gonna buy it here? I don't think so. Would you have bought it down here? I don't think so. I mean, there's no undercut and rally. It's just BTFD setup. Just if it's down big and ugly, buy it. That's one of the jokes I like to make all the time, is that if something's down big on volume, like it was, I guess what would that have been? 1, 2, 3, 4, 5, a couple of Fridays or Thursdays ago, down huge on volume like that, it's a buy signal. No longer is strength on the upside a buy signal. It's big weakness on the downside. Team, this one looks like it could be a short. I don't know. It's trying to break out, and it's just really nowhere. I mean, if anything, it might be near to a short point at the top of the range than a buy point. But you can see there is very little that's set up here, and that's mainly the point I want to make here. Is that there's not a lot to be stepping into. Tenaris we looked at. Tesla is a short. And you could have shorted it Friday at the 200-day line or as it dropped below. Now you're looking for confirmation on a break of the 50-day line. You notice the pattern is very choppy. And it seems to just get to extremes on either end of the range. And then you just kind of flip it the other way. So I don't know if it goes back up to the highs first. And maybe it rallies if the market rallies, but if the market rolls back, look for this thing to come off. And it might be a sort of a fractal head and shoulders setting up. I mean, this would be the right shoulder, and this would be your head, and this would be a left shoulder here. You have a big break here that defines the right side of the head. There's the head. We'll give it some eyes. How's that? And a big smile. That's my Elon Musk caricature. I was thinking he sent his car up into space, didn't he, on the big Falcon? Was it the Falcon X or I forget what the big rocket they have now is? And I heard someone said he was going to send up his ex-wife, but because I think he's got at least one or two, I don't know. Twilio, bottom fishing Bible gap of 3 days ago. I think we looked at this on Friday. And it's moving higher, but not really something I'd want to buy. Now here's Twitter. Now here's the thing with Twitter. Whoop, let's see. Oh, they're not going to give it to me here. Let's see. Let's go here. Yeah, here we go. Okay, this is a weekly. I just switched to weekly. You got this big structure here, and you're coming right up underneath it. And I don't know, does this present an area of overhead, or is it too far away? Are you there, Dr. K, or did you leave?
Yeah, no, I'm still here. I'm just tending to this thing I need to tend to. But yeah, I mean, that's what, 3 years ago.
Yeah. So does it matter?
Generally it doesn't. I mean, it matters a lot less because so much time's gone by. But at the same time, I mean, this pattern still, even if you took away those first couple of years of trade, the pattern still seems kind of vulnerable because it's just sticking straight up. So
yeah, it's extended, but it's a Bible gap up too. That's the other thing. So the only place you're going to buy this is you're not going to buy it, up here. You have to buy it along the lows of the Bible gap up day. So that's what you'd be looking for, the 10-day line, if it catches up. But I do think because it's extended, it's going to need some time to set up again. So, but they're supposedly getting their act together.
Snapchat and Twitter are, I mean, they're not really the market leaders. I would be surprised to see them just take right on off from where they're at because of their fundamentals. So yeah, I think they're going to take some time really to work through this big gain that they've had recently based on earnings. Yeah, so I wouldn't. They're not the market leaders, not yet anyway.
Vertex had a big move higher, and then it crashed with the market. Now it's right back above the breakout point, or right at the prior breakout point. I guess if you drew a trend line here, you are, where would you draw it? Like this. I guess this would be your breakout point. Whoop. Right there. So it's right back at it. But that's neither here nor there. It's kind of in no man's land, as is typical of most stocks. Weibo had a pocket pivot after earnings, a gap up move, and then it kept going to new highs. So V-shaped move to new highs, not really in the Bible position. And I don't even know, we were talking about putting this back on the focus list, but I'm not even sure I'd do that. I mean, this may be a breakout that ends up failing.
I wouldn't put anything on the focus list right now because the market's just straight up off the bottom.
Right, and everything just...
I would expect some kind of pullback. So when we see the pullback, and then we see what if WB pulls back on constructive volume, then I think it becomes a candidate for the focus list.
Yeah.
But not until then.
I agree. Workday, breaks out on out of a V-shaped pattern, and that's a very choppy formation. Weight Watchers looks like it wants to go higher, but this was actually, you had to buy it on the pullback day on the Friday that the market was blowing apart and undercut its prior lows. It came down to the 10-day line. So, but I think the best way to operate in the midst of all this volatility is to whittle down, because okay, I have a big buy list right now, but this is really my general buy list. And what I'll do every day is I'll whittle it down to 5 or 10 names that I'm watching. And it may be over 1 day, 2 day, 3 day, 4 day, 5 day period. I'm sticking to very few names. So for the most part, over the past few days, I've been playing Snap, Twitter, Square, what else? Oh, X. And I've really been focusing on them, and a very, 5 to 10 names, just very few. And I'll sometimes go short them or long them depending on what they're doing. But I also have 5-10 short ideas. So Yelp is there, Tesla is there. There are probably a few others. I probably should pull up my short list. Apple, I think, might be a short. So anyways, looking at, just finish off this YY, and kind of in no man's land, nothing going on there. I mean, you see Zen actually chopped out of here. It pulled in with the market and then zip right back to new highs, but that's not in a viable position. That's looked pretty good, Zendesk. But if we look at some of these names, they might become shortable. Is Apple a short? I mean, it almost looks like it. Is AMAT a short? Is it going to come at least back into the 50-day, or maybe it fails outright? I don't know. Is Broadcom, which uses Avago's symbol, is that a short here at the 200-day line? So you got some names that have V'd back up to the upside, and you wonder whether are they setting up to go higher, or are they at resistance going to move lower. First Solar, they actually come out with earnings, I think, on Thursday, so I'd be mindful of that. Is KLAC, we put a pocket pivot report out on that one, but it's failing. So does that become a short here? That's a possibility too. So that would be one name we put out as a pocket pivot, not really panning out. Does Lam Research become a short at the 50-day line? Okay, and a lot of these are V-shaped moves. They kind of look like they are to me. So, Nutanix, is that a short here? So these are the things I'm working on, my short list. Let's take a look at a couple others. OLED, Universal Display, is that a short here? I tend to think not, because it's already had a long move and it's going to probably hang out for a little while. I definitely would look at it at the 50-day line. Is Take-Two a short? That's not really rallying with the market, and it's in a little bear flag. Volume is drying up, so I don't know. Is this going to break lower, or do we get a rally back to the 50-day? I don't know. We'll find out. But that's one that I have on my list, or have had, and it was shortable when it came up here a few days ago. That would have been on Monday. But you can see there are some names that you can look at as shorts after the rally. Xilinx, and maybe throw in the fact that LRCX and a few others, KLAC, look weak in that space. Is this a short here? And of course there's Yelp, which we put out a report on as a short. And they're pretty concrete. If you take a shot, it's very easy to just get stopped out. And that's pretty much where we're at with this market. So we have, a few short ideas. The whole long side of the market, everything's in a V position, and I think things need to settle down before you start piling in. And I think we'll just see how things progress over the next few days, maybe the next few weeks. But I would give the market even odds of at least testing the prior lows, or continuing to set up and go higher. It's going to depend on how these stocks all set up. But it's a very difficult period, a very ill-defined period, shall we say, and difficult to do much unless you're swing trading it. So if you're not a swing trader, don't expect to be taking positions and holding for long-term trends. I don't think we're at that point. Would you agree, Dr. K?
All right. Well, I mean, it's going forward. It's going to be a tug of war between QE and a rising rate environment. And the speed at which QE is going to decelerate, maybe it won't decelerate. Maybe they're not going to have a choice but to keep printing. So that's all going to guide
Yeah.
the markets. And that's a big tug of war. That's a lot of riptides, and I think that's going to account for heightened levels of volatility. And just it can't be ignored that the speed of this correction was the fastest drop we've seen in 80 years. So I think that speaks volumes that institutions are ready to pile out if needed.
And so I want to finish out with one last thing. Somebody did some math for us. $233 trillion in global debt divided by 7.6 billion people on the planet. That comes out to $30,657,000 of debt per Earthling. And you think people had problems with their credit card debt? That's not even debt that they chose to take on.
And by the way, 3 billion of those 7.5 billion are unbanked, and another 2 billion have limited banking resources. So, in other words, 5 billion of those 7.5 billion barely have, the equivalent of probably $10 to scrape together.
Right, but they still get to have $30,000 of allocated global debt. I love it. Anyways, it's a wild, wild, wild world. Anyways, or is it? It's a mad, mad, mad world. Is that old movie from way back? Yeah. Anyways, that's all we have, you guys. Thanks for showing up on a Monday, on a holiday Monday. Although it's for most people, they went to work today. Because I was hearing about everybody's morning commute on a Monday, and fortunately, I don't have to commute anywhere, thankfully, especially in LA. But that's where we are, and we'll see what happens tomorrow. Futures are roughly flat as we conclude the webinar, and we'll just see how things progress into tomorrow. So we'll catch you guys again on Friday. Have a great rest of your long weekend, and we'll see you later.
So long, everyone.